This is the most vulnerable market there has ever been. And given the incredible record of the past, that the highest multiples do not predict good times, but have historically predicted the worst times, it should give you cause for some concern and some caution. And of course, the market does not feel concerned or cautious. It didn't in 1929. It didn't in Japan in 89. It didn't in the US before the housing bust of 07-08. That's the way the market is. You will not be warned. The very best of times, it will feel like the highest possible pricing, the highest possible PEs will be followed, not just by tough times, but some of the worst times that occur. Just let's go back to 1929. So you had the highest PE, the greatest bull market, not a few years before, a few days before the beginning of the biggest wipeout in fundamentals, not the stock market. Yes, the stock market went down colossally, but the economy collapsed, the global economy, international trade, currencies, everything went to hell immediately following the greatest bull market in history. So you have to ask yourself, what was the market doing that it not only couldn't see trouble coming, but it apparently saw heaven coming? It could not possibly have been more wrong. So you fast forward to Japan, which is, in a way, the mother and father of all bubbles. The Japanese market had never sold over 25 times earnings until it did in 87. By 89, it was put to us that it was 65 times earnings. As far as we could tell, the Japanese market was 65 times trailing earnings, never having sold above 25. And this is what should put the fear of God in anyone trying to time the market. It had gone up 150% more than it ever had in history. What did it predict? From the day it hit its peak in late 89, you had a lost decade, arguably a lost 20 years. The Japanese growth went from sensational to miserable. The Japanese market for 8 minutes sold at a larger value than the US market. For an economy a third as big, it was incredible. And again, we had a sensational PE, not predicting good times, but predicting the worst times that you could possibly have wished for Japan for the next 20 years. If you think about the great financial crash, it wasn't the highest PE in history, but it was pretty darned high. And again, from a very high level, third only to 1929 and 2000 tech bubble. Instead of predicting good times, it predicted the worst financial crisis in modern history, which nearly brought the entire developed world to its knees and needed the most sensational bailouts and injection of liquidity, etc., to save our bacon. Incredible. So if you look at the three great events, or three of the four great events of the 20th century, you have to say absolutely spectacularly wrong. Peak multiples projecting the worst periods of our history. And let me just talk about Amazon. Amazon went up multiple times in 99. And Amazon is a terrific, successful firm and one of the players now. But it went down not a lot in 2000 and that bear market. It declined by 92%. I mean, just think about that. A successful company, not disputing it, brilliantly managed, etc., went up, let's say 10 times in a real hurry, and then declines 92% before rising from the dead again and inheriting the world. That is the nature of the beast. If you go back in history, you find there was a huge bubble around the canal building in Europe. Then there was a huge bubble around railroads, both in the US and particularly in the UK and Europe, where they built or planned to build 6, 7 railroad systems between Manchester and Sheffield. Absolutely Looney Tunes. Of course it was huge. It changed the economy, it changed the world. But there was a huge financial bubble and it broke. And it didn't wash away the railroads. It just washed away the investors. The railroads were left. They changed the world. They allowed a great surge of economic growth, but they bust. The internet, it's a real idea. It was serious. And it bust. Amazon, brilliant company, and it bust. Try owning a stock that goes down 92%, and you'll know what I mean by bust. So to have AI be serious, and it is serious, anyone can see that. It's a very serious idea. But if it doesn't have a glorious bubble up front and then bust and then regroup and be serious, it will be the first such event in history, guys. It will probably happen. Now, there's always the odd thing that is different and new, and maybe this will be it. But history says that's the pattern. Brilliant new idea does not mean the path is smooth. Brilliant new idea typically means the more brilliant, the more real it is, the more dollars get behind it, the bigger the bubble, the bigger the bust, and then you dig it out and you make your serious progress. It is not clear how many people will make any money in AI, is it? And how do you sell chips to lots of people when, for a year or two anyway, they're reeling back from the fact they've spent tons of money and they've had no return on it? It's a very, very lively possibility that one day in the next couple of years, there will come a day when it will not have done well at all. In November, ChatGPT comes out. And yes, to the insiders, that was spiking for a couple of years in terms of developments. But in terms of the stock market, it was like a bolt across the sky. We knew nothing, and suddenly there it was, ChatGPT, AI was everywhere. And the Magnificent Seven kind of sprang to life. And the rally that took place for the first 10 months was just that, just the Magnificent Seven, almost all making a claim on AI. And the balance of the S&P wasn't actually going up at all. And then in the fall of 23, the rest of the market kind of was won over by the sustained gain and has had a very nice rally, but nothing compared to the rally in the Magnificent Seven. That extreme concentration has been a factor in several great bull markets. It was in 2000, was in 29 to a lesser degree, but spectacularly in 2000. And here it is again. So AI played a very big role. AI is serious. Whether people will actually make real money is another matter. But is it serious? Yes, it is. It will change the nature of warfare completely. It may be in a year or two, it will be simply impossible to stand up in open space or run a tank into open space. Thousands of well-informed little machines will buzz around your ear and destroy you. It will know who you are. It will have face identification. It will be an alarming tool for governments to know what you're doing, who you are, where you are, and if necessary, in warfare, destroy you. So it will change some very important aspects of life. Whether it will change mundane corporate matters enough to make good money, I think a lot of people, including me, have serious doubt. So it's a very important development. It'll be with us forever, and it will change life in many ways. I'm not convinced it makes the market that attractive, but at the moment, we're in the selling shovel mode, where you sell the chips to people who think they probably can use them and they should be seen to be using them. And everyone's putting a lot of money into developing AI products. And so the chip seller is brilliant. And it's not clear yet whether the people paying for the chips will ever get a return on it. And we'll find out. I don't think it's inconceivable. But it's clear that that produced the oomph to take this market that was dwindling down and produce some fairly spectacular performance, particularly of 7 stocks, and to produce such broad-based enthusiasm eventually that it drags the broader market with it to a pretty decent degree. And we had a really interesting decline in 22. But when you look at the new highs now, you'd have to say that if you're blowing the whistle in 21 and saying, watch out, this is a bubble peaking, you've been pretty handsomely early. And I just want the listeners to know that this is par for the course for me. This is not anywhere near as brutal as Japan, and it's not as brutal as 2000. And it's extremely painful. And one doesn't like to be early. And the problem with being too early is when it gets to a historical level, I tend to blow the whistle and say, look, this is historically very dangerous, and this is what's happened historically several times, and there's no rule against the market going up more. And Japan is the mother and father, as I said, And a warning to anyone, you've never been over 25 times earnings, you go to 65. You have to be ready with some part of your brain for the market to keep going. Having said that, bear in mind that it didn't change the outcome. It changed the timing of the outcome. But Japan went all the way back. It gave up every inch of ground that it had made just because it kept going for 3 extra years. Changed nothing.